Well, hello again. This is Robert Schein, Managing Director and Partner of Blanke Schein Wealth Management. Today is Thursday, August 20th, 2020. We have several topics to discuss that markets are paying attention to, so we're paying attention to for our clients as we manage portfolios. So let's get right to it. Our first topic of the day, and actually market moving, we saw this yesterday afternoon as the market sold off. The Federal Reserve released their minutes, and it kind of gives us an indication, a picture preview into what they're thinking for next month's Fed meeting in September. But very specifically, the Federal Reserve Committee is divided as it relates to the Federal Reserve providing more intervention to control yields. It's called yield control of the yield curve. And so right now, it really seems that they basically said that the current economic environment doesn't warrant yield curve control. Ultimately, what they have done, especially since the crisis or even in previous times, and monetary policy has gone into the open market and purchased treasuries. And one of the thought process and theories in doing so is they keep yields low. And they keep in mind they can purchase treasuries on a 2-year, 5-year, 10-year, and a 30-year, so they can control again the yields, maybe on the 10-year basis right now, or at any point in time or along the curve. If they want to help mortgages, they'll go longer dated securities. So the reality is while the minutes have negatively impacted the S&P 500, the S&P just hit an all-time high. So for S&P to pull back a little bit, consolidate, take a breather, and then sort of test the 3,200 to 3,150 level, as I indicated in my previous daily update for you. That's not uncommon right now. In fact, that's actually probably warranted because we've come a long way. Again, erasing the 35% downdraft since February 19th, all the way round trip to now new highs on the S&P 500 and even higher highs on the NASDAQ. So we expect, again, more uncertainty going forward. And why would that be? Well, Congress is not going to be acting. They're not going to have the CARES 2.0 Act to extend unemployment insurance. Let's go to that topic right now. As unemployment right now, that report was negative this morning as we had initial claims jumping back up over 1 million once again. So again, we're sort of seeing unemployment come down since the pandemic and since we're reopening across the United States. But right now, you're going to have sort of a stubbornly high unemployment rate. So watch the initial rate as well as the continuing claims rate. And both of them are bouncing around right now where they are in those levels. So they're going to continue to persistently be high. But keep in mind, can markets hit all-time new highs while unemployment is still stubbornly high? And the answer is yes, again, from history. Again, we always continue to look at history. But if you recall from 2008, 2009, the Great Recession, it wasn't 5 years until 5 years later that we got back to full employment. In fact, higher unemployment or higher employment, if you will. It took 5 years later from that post-last recession. But markets hit all-time highs once again, even before that. And if we go back to even the early 2000s, 2001, 2002, it took longer than 5 years for the economy to pull back to higher employment and erase all that unemployment, if you will, as a result of those two previous recessions. This one will be longer as well. We won't see the 3.5% unemployment rate. We're stubbornly high at 10% right now, 10.2%. And so, and the reason why is corporate America will use technology and efficiency, as well as the baby boomer generation. The demographics are playing into retirement. So many Americans were waiting to retire or pushing retirement off. And now corporations have a non-discriminatory clause. Yes, I'm going to say it. They can discriminate because of COVID. Okay. And so as a result, they're offering early retirement or guising it as early retirement, but ultimately taking a higher compensated employee who's been with the firm for 30 years and just saying, hey, listen, sorry, let's have some retirement sooner than later, and bringing in somebody new from, let's say, college, which is a much different wage earner, if you will. That is happening across the scale, across America. On epic proportions. We're seeing it in every facet, from the airlines industry to the restaurant industry to even corporate America. And that means that earnings will continue to be more profitable because the labor costs are going to come down over time. You will see this play out. You will still see markets hit all-time highs as unemployment stays persistently and stubbornly high. So that's sort of how the economics play into when we're at home and we're saying, hey, the economy that we have and we see in our local neighborhoods isn't so good. We're seeing commercial real estate, more for lease and for sale signs. That's going to come. We're going to see that. You're going to see more bars and restaurants close. Unfortunately, it's tragic. It's a byproduct of this particular situation. And then you're going to see the bigger companies, larger companies, the publicly traded companies get bigger and stronger because now they can go lean and mean. They can bring in technology. They can retire the older demographic, if you will. And so we're going to see a huge wave of retirees 2.0. This is going to be the largest second wave, accelerated wave of retirement in America. I know here personally here at Blanke Schein Wealth Management, we've been busier than ever. We have a lot of clients that have reached out to us and say, hey, listen, a friend of theirs needs some help and advice, and we've been jumping on a call just about every day, helping those that are in need and just need that proper retirement advice. Again, we're here for you. We're here for anybody that you may know. So feel free to reach out to any one of us on our team and shoot us some information, and we'll make certain that we follow up with somebody that you care about, and we'll make certain that we take great care of them. So that's all we have on our updates today. Unemployment is persistently high. We're going to continue to see that. Markets will continue to make higher highs in the long run. In the short term, we definitely will see some consolidation. And hopefully we have Congress later this weekend make a deal to help those that need that in the United States, across America, as we go through this. So that's our update for Thursday. Thanks for watching, and we'll see you again.